Hawala System Scheme. The Hawala system is a completely anonymous, informal payment system which is described in 4 words: transaction which never happened. Banks or other financial institutions are not involved in any way. Thus, the amount of money obtained in a criminal or dishonest way will come into the hands of the recipient, bypassing any regulatory authorities through Hawala. This scheme, it is mostly used in Asia, Africa, and the Middle East than in Europe and the USA. The idea of the scheme is entirely based on trust. The client comes to the reception desk and hands over, for example, $200. He does not give any of his personal information, nor does he give the name of the person to whom he sends money. After giving the money and paying the commission, the client receives a code. It is in the QR code or just the number of one of the bills and leaves. The code serves as a kind of password. The recipient of the financial transactions comes to the Hawala receiver and calls the code given to him by the client. He receives $200 without providing any of his documents. Hawala transactions take very little time, from 2 hours to 2 days. It is clear that some transactions of this informal system are absolutely legal and made by ordinary people. However, a fairly large percentage of Hawala transfers are used for money laundering. After the September 11th terroristic act, the Hawala system was forbidden in the USA, but some transactions still take place in Europe. Fraud with property purchase. One of the easiest and safest ways to legalize a large sum of money without indicating the source of income is to buy real estate with it. According to a New York Times investigation in 2015, about 70% of properties in the most expensive U.S. region, Manhattan, are owned by foreigners. Real estate owners from almost all countries are represented there, including China and Kyrgyzstan. This scheme works simply. Real estate sellers are not interested in the buyer's source of money. Moreover, the scheme works equally well whether you purchase a small apartment in the province or a loft in the European capital. The more expensive the property, the fewer questions are asked of its buyer. Another way to buy luxury real estate in the United States, and thus legalize a large amount of illegal money, is through a shell company. This company buys the property and then closes after a couple of months, but a mansion or penthouse purchased through this company remains the property of the fraudster, who is a legal millionaire now. Art auctions scheming. The global art market is not just the place where you can enjoy the greatest paintings and sculptures, but also a tasty morsel for money launderers. The estimated value of this market is $50 billion. But the most interesting thing about it is that it is absolutely uncontrolled. The price for a piece of art is hard to define. It may vary from a couple of dollars to thousands and millions, which gives the criminals a lot of space for maneuver. Besides, the purchasing of art pieces is anonymous. The scheme is simple. If you have a few $1,000,000 that you haven't declared, buy a Van Gogh or Monet painting. Then, instead of being seen as a cheat, you'll be considered an art collector and part of the elite. This is what the dishonest Malaysian businessman Zhao Lo did. His money laundering scheme involved purchasing renewed famous masterpieces. Lo acquired a $35 million painting by Pablo Picasso and a $107 million painting by Jean-Michel Basquiat. When buying works of art that are put up for auction at Sotheby's and Christie's, no one ever states who the buyer is and where his money comes from. Of course, scammers take advantage of this. Cryptocurrency scheme. Bitcoin or other cryptocurrency wallets are not considered official means of payment in most countries. They are anonymous. Therefore, virtual currency can be easily used to withdraw funds to any country. The scheme works simply. Imagine the fraudster who has several thousands or millions of dollars in cash obtained through the sale of prohibited substances or stolen from some charity fund. A person simply transfers this amount to an electronic wallet, buying bitcoins, Ethereum, or other virtual currencies. Now the fraudster can cash out small amounts, like $5,000 to $10,000 from his account, and spend them without declaration. Also, there are countries where any person can make small purchases of cryptocurrency without exchanging it for local money. It is possible to make direct payments for a hotel room or train tickets using virtual currency. Besides, they accept cryptocurrency at some electronic stores, online gambling casinos, etc. The cryptocurrency scheme seems almost ideal. Still, it has already caught the attention of the authorities. Thus, Arthur Brodevsky, the founder of the virtual currency Liberty Reserve, was in prison for 20 years in 2016. The court ruled that his payment method was used for laundering money by drug traffickers, pornographers, and other criminals. Restaurant income fraud. This money laundering scheme is used by criminals who have enormous cash turnaround. It's not hard to legalize $5,000 to $10,000, but what to do if the one has $1 million of illegal money? To wash $1 million, the criminal can open an eating venue like a restaurant or pizzeria. The scheme is very simple. The food venue receives customers all day long. Many restaurant visitors pay cash for their food and drinks. No one can say for sure how many people visited the restaurant that day and how much cash has flowed into the register. Need to legalize $1 million? Just declare this amount as your monthly or quarterly restaurant income. It's very difficult for financial institutions to verify the authenticity of this amount. In September 2015, the U.S. Department of the Treasury's Office of Foreign Assets Control labeled 5 Mexican restaurants money launderers. One of them was Mitsu Sushi. Fake court process. There is a scheme which helps to legalize money through the fake court process. The scheme works simply. 2 companies are registered. They are in collusion with each other. These companies sign an absolutely legal deal according to which one of them is obliged to deliver, for example, a batch of handkerchiefs or socks, etc. The company then fails the delivery. The other company has the right to start a court process and receive large compensation for breaking the deal. The unsuccessful supplier of handkerchiefs is found guilty and is obliged to pay a large sum of money into the account of the affected company. Thousands or hundreds of dollars received by the affected party into their account under a court order are washed. Getting a fake gift. This is a fairly simple but unsafe way to launder tens or even hundreds of thousands of dollars. The launderer just has to receive an expensive gift from a secret admirer or distant relative. Thus, scammers get gold and diamond jewelry, Rolex watches, branded bags, and even expensive cars from anonymous benefactors. The scheme works simply. The criminal wants to legalize $100,000 obtained through ill-gotten means. He gives the person he trusts cash. This person could be wealthy enough and have a transparent source of income so that his purchase of expensive things does not cause surprise. He buys a Rolex with the criminal's money and gives it to him later as a present. That's all. They legalized $100,000. The problem with this scheme is that the authorities of most countries require expensive gifts to be declared. And even if you indicate in the declaration that you received an apartment from a secret boyfriend or girlfriend, the tax office can still contact you to find out the name of this person and check whether his income is high enough to give expensive things. Also, you may need to pay tax to get a luxury gift.